Let's bring in former Federal Reserve Vice Chairman Richard Clarida now. He's Global Economic Advisor at PIMCO. It's good to see you today. First of all, the remarks, even with everyone factoring in a rate cut in September, it just was so clear. It was so easy to grasp. As Steve pointed out, you didn't need the economics reporter to do the translation for you. Does it in any way, shape, or form box the Fed into its next action, given that we still have data points to come? A big jobs report, PCE out next Friday?
Well, Contessa, thanks for having me on. A couple of things. First, the Fed minutes, which were released 2 days ago, also were pretty clear that they're inclined to begin moving in September. So today was really reinforcing that message. Your question is, are they boxed in? Well, I do think they think they're going to cut in September, and for a pretty wide range of data, they will cut in September. I think the thing that stood out to me in the speech today was that sentence in which the chair said, "We will do, quote, everything we can to prevent a rise in unemployment." That's quite a strong declarative statement. It's not a declaration of mission accomplished on inflation, but they do think they're close, and their attention's now turning to the labor market.
We saw new home sales come in higher than expected by a pretty significant amount, 100,000 or more. How different would the data need to be in order for the Fed to change its calculation and its expected trajectory on action?
Well, there are a couple of things here. First, the committee will, of course, have a policy rate decision at the September meeting, as they always do. Secondly, in September, they'll be updating their projections and the dot plot. So we're looking for not only a rate cut in September, but a change to the dot plot from the June plot, which showed only one cut this year. Our view is that if they have enough confidence to cut in September, they're probably planning multiple cuts, and they'll make that clear. And I think at least 25 basis points a meeting would be our baseline for a pretty wide range of data. I think the data they're really focused on now, Contessa, is the labor market data. I think the rest of the economy will be focusing on as well. But the labor market data, I think, will be key here. And the speech today reinforced that.
We heard Austin Goolsbee tell Steve Leisman that he has real concerns about parts of the job market, even though there are strengths in other areas. What parts of labor in particular, and more broadly the economy, do you think still present pitfalls?
Well, remember a year ago, the goals of Fed policy to reduce inflation was to take some of the heat out of the labor market. So we've had a rise in the unemployment rate. We've had a slowdown in the rate of growth in employment. And so far, that was really part of the package to disinflate the economy. What was very clear today, Contessa, is that any additional softening in the labor market is not something they welcome, and thus the everything we can quote. We did have a big downward revision. 800,000 jobs that we thought were there were revised away. And so I think right now their judgment is that the labor market is in good balance, but they are very attuned and attentive, as we used to like to say at the Fed, to any further slowdown in the labor market.